Also, everyone, we're tracking shares of Airbnb this morning. They're plummeting in the pre-market, down 13% after the company delivered a cautious outlook for the year. It's warning growth would pale in comparison to 2022's strong performance here. And, really parse through some of the earnings call that took place last night, everything that was talked about from some of the elements of the summer 2023 release all the way into artificial intelligence and where that can be weaved in. But I think investors really just zeroing in here on where the growth is going to come from and at what type of average daily rate will the company see that. And I think even in their projections pointing out that the night's growth will be slower than some of the revenue growth that they're forecasting. That revenue growth for the second quarter, they guided for $2.35 billion to $2.45 billion there. And they're actually coming off of a period where they saw night's growth slightly lower here. And so for the market that is trying to, and for the consumers, I should say, that are trying to figure out where their pricing comparison is going to be best, and within those transparency pricing rollout that they had as well, it'll be interesting to see how effective that is in ultimately driving more of the reservations, the bookings, but also at what rate that comes in, especially as they just had a winter release that was prompting more hosts to put their rooms online and list online.
I mean, I think we would go from better than feared, which was our discussion that we were just having, to as good as it gets, right? It seems like because of that big surge that there was in 2022 in demand, that inevitably there is now going to be this slowdown, or maybe not inevitably. It does seem to have caught the street off guard that things were not still booming to the same extent. I mean, the company is still growing here. EBITDA is going to be about the same this quarter as it was last quarter, excluding costs. And that year over year, you're not going to have the same kind of growth. And it's just, comparables are really tough here. I was struck by the pricing. You were just talking about pricing. We were showing it on the screen that the average daily rate was $168. And what's going on there? Some of it's currency. People's willingness to pay is something that the company cited. In other words, maybe seeing a little bit of pushback on pricing, and a shift back to urban rentals, which I also thought was quite interesting because that's something that had obviously changed during the pandemic. And so all of those factors suggesting that, again, things were, that was as good as it got for at least a little while. Maybe, at some point you could clearly see a reacceleration here, but for right now, it's just not a favorable comparison. Yeah,
one plus on the kind of resurgence, if you will, that is brewing within the urban rentals would also position them to have kind of a strong regulatory relationship within some of those cities that they were looking to have the ability to bring more rooms online. Because at the same time that you think about urban rentals, it's also where that's impacting the availability of low-income housing as well, especially if many people are just going to list on Airbnb. Typically, those buyers in that market are willing to spend up, knowing that it will be income that either can provide them a tax benefit or can just be a side piece of income, but then that impacts, of course, the residential market in those cities as well. So they do have a strong relationship, it seems, within some of those cities where that was in question before. But I think, even as we hear from Brian Chesky later on today, that's going to be something to really kind of speak a little bit more about, what they're doing within those communities to make sure that it's not dampening those markets so detrimentally. And also at the same time where this company is still trying to grow out as well, coming off of its first profitable first quarter.